So we're hearing from a lot of our clients right now that they're going to wait until the interest rates for their mortgage drop a little bit. Now, is that really the best strategy? We have 5 reasons why buying now might be better than waiting for the rates to drop. That's what we're going to get in today. Hope you stick around. Hi, I'm Joe Harris, and I'm here with
Nick Morgan.
What's up, Nick? How you doing, bud?
I'm doing great, Joe. How are you?
I'm good, man. I love this topic.
Yeah, it's a fantastic topic for sure. Maybe a different perspective on what other people are saying or what other people are thinking right now with the general housing market.
Yeah, there's a lot of people as a population.
Yeah,
I've always wanted to say this on one of our podcasts. Maybe I have before, but I think a lot of people. It's actually our nature, human nature. They like to buy high and sell low. You're like, Joe, that's not how you do it.
Yeah.
So, and this is a perfect example. When people are running from something, it's, you got to run towards it because it's what people aren't doing, right?
Yeah.
So I like to buy low and sell high, but that's just not what people like to do.
Yeah. Yeah. And we'll definitely get into that, why it might be low right now. You know what I mean? But it seems a little counterintuitive, but
it does. But I understand what you're saying.
Yeah.
So, right now the market is, in some markets, like in our market here in the Melbourne, Eastern Florida area, it's actually doing pretty okay.
Right.
It's not, we're not breaking any records. But the prices seem to be somewhat stable and even going up in certain markets.
Yeah. Yeah, absolutely. And if we do want to hop right into it with the first reason that I wanted to touch on was the heavy discounts and seller credits that a lot of people are getting right now. And maybe you can touch on why that's happening. And that is maybe specific to our market.
I wouldn't say heavy discounts. I haven't seen heavy discounts. Typically, the only reason people come off their price, we're seeing the opposite. We're seeing people stick to their guns on price. And, they believe that their house is worth a certain amount. The sellers, that's the sellers, and the buyers are trying to come in and get a deal. But this isn't 2009. This isn't 2010. There's still a lot of people that can buy homes. There's not a lot of foreclosures. There's still a low supply, even though supply has increased.
Yeah.
It's still relatively low, comparatively speaking, to like a 2008, 9, 10, 11 type years. There's not a lot of distressed properties, not a lot of short sales. And so people aren't desperate to sell their homes. They're not really discounting their price. So, where we are seeing some concessions is that, maybe now the seller might be a little bit more willing to pay closing costs than they were a couple of years back. In 2020 and 2021, the sellers were not paying closing costs.
Absolutely not, yeah.
The sellers weren't doing 45-day close. They're like 30 days or you're out. We'll get the next offer right behind you. But now, there's a little bit more wiggle room there. And so sellers are a little bit more willing to help the borrower on their closing costs. They might be a little more willing to be a little more flexible on that closing date than they were in the past.
Yeah, absolutely, yeah. When I meant discount, like kind of the seller credits, helping out with closing costs, stuff like that, that kind of wraps itself into the totality of the price.
And we've gotten into the math on that, is it better to get a credit from the seller, that might help you buy down the rate, or have the seller reduce the price of the home? And if you're trying to get the lowest payment, if you're paying cash, cash is cash. You want a lower price on that home. But if you're financing it, getting the seller to pay money towards your closing costs so you can buy down the interest rate goes a lot farther in your monthly payment than a reduction in price.
Absolutely. Yeah. It goes a long way.
Yep.
Yeah. And that comes to reason number 2, in quotes, low home prices. And again, this might be market specific, but they could be low home prices in comparison to what may come in the next few years.
Yeah. So I agree with that statement. Right now, I believe that the population is still growing.
Yeah.
I believe that they can't make homes fast enough because they didn't make a lot of homes from like 2008 to like 2014. There's 6 years where like home building was at a super low number. And they're still catching up on that. We still have like a 5 million home shortage in this country, according to some studies done. So what that tells me is that inventory is still low. And when all these people that say, well, I'm waiting for the rates to come down, and I understand their logic, like it's going to cost me more now to buy that home in the rate, in the payment. But when all those people rush in to buy homes, the second the rates start to dip, I can't guarantee you, but I guarantee you that people that that aren't buying now are going to buy then. And when more people are out buying, it's just going to drive the prices higher. So I don't know that we're going to see home prices much lower than today. I could be wrong.
Right.
You know, there could be some kind of black swan event that drives home prices lower, but I don't know what that would be. You know, had you told me in 2020 it was going to be a pandemic that actually ended up driving prices up, I wouldn't have believed you in the beginning of the year. Mm-hmm. So I don't know what that would be. But right now, everything else being equal, I see home prices rising in the future.
Yeah, absolutely. It seems like that demand whenever that is,
when it kicks in.
When it kicks in, it's going to kick in, and it'll be a flood.
And it will drive pricing straight up.
Yeah, exactly. Awesome. So that moves us to number 3. We kind of touched on it a little bit in the first 2, but it's basically less competition. But more specifically, when we're talking about less competition, is getting your offer accepted. Right. You're going to be competing with so many different offers that you got to look great to get your dream home, you know?
Well, you know, like again, 2020 and 2021 were a great reference point to say that, you know, when there's many people bidding on a house, they're going to bid. It's just like an auction. That bid's going to drive the price higher. And if there's less people competing for that offer or that home, they're not going to drive the price up. You know, people were paying $20, $30, $40, $50, $150,000 over asking price. We saw one time, $300,000 over asking. And in this market where homes, you know, it might have been a $900,000 home or an $800,000 home, they were paying $300,000 over market for, which was insane.
Yeah.
So you're not seeing that right now, you know. So if there's a house for sale and it's priced reasonably well, there might be a multiple bid situation, but for the most part, homes are, you know, they're selling for at or around list price.
Yeah. Yeah, absolutely. I can't imagine. I wasn't around during the COVID years, but yeah, just like the amount of people that you're competing with and everything like that. But cool. So number 4, this one is kind of straightforward, a no-brainer, but it's good to touch on that you're building equity now before the prices rise. So you're kind of building equity in the home, and hopefully we are at the low point and the demand comes in and improves
it is all relative. I mean, a low point as compared to the future, but we're in a high point as compared to a couple of years back. And building equity in the home, I mean, people say, oh, it's too late to buy Bitcoin. As you probably know, I'm a big fan of crypto and Bitcoin being one of them. This is not financial advice. I'm not your financial advisor. Please do your own research. But people say, is it too late to get into Bitcoin? Too late as compared to what? Yeah. Like, I think it's a good time to get into Bitcoin. I was in it earlier, but just like houses, is it a good time? Yeah, it's more expensive than it was in the past. That's typically going to be the case. But to me, you just look at the pure demographics of the situation where we have a growing population. The millennials are actually aging into their most productive income earning years, and they're the largest segmentation of our population. We have a population below them. I think they're Gen Z. What are you? Gen Z? Yeah. Gen Z. We're very well educated. You know, they're not yet really into their prime home buying years, but they're going to be, and they're a very large, well-educated part of the population that's going to have some high income years, and they're going to buy houses. So we have a lot of positive things coming along. We have a population growth that's, you know, still booming. And so to all these things, I just don't think property values they have a history of not going down over time. Right. So that means they go up. Yeah. So wherever your point of reference is, like, I think it's more expensive to buy today than it was 5 years ago. Yes. But there's people that thought 5 years ago was more expensive 20 years before that. So I think right now is a good time to buy a home if you believe prices are going to continue to go up and rise, which I do. I believe that firmly. I mean,
the way I think about it, you know, time moves one way, right? You can't go back into the past.
Some would argue with you on that.
Right. But like, you know, you make your best decision on what's going to happen in the future. Not, you can look at the past for what might happen in the future, but you know, you can't go back there.
Past performance isn't indicative of future results, right? They tell you that on all investments, but if you look at history over the last 100 years, homes have typically appreciated over time. People are going to say, well, what about 2008, 9, 10? Homes went down. Yes, they did. But where are we now? We're well above and beyond the prices that it went from down to and back up. And now we're even above those numbers, well above.
Right. Awesome. Cool. So the fifth and final reason that pulls up, you always have the ability to refinance. And you don't want to bank on it, right? Obviously. But if you do think the rates are going to come down, the demand is going to flood in, the prices might rise, you have to keep that in mind, right? Like, and weigh those options out, you know?
Well, yeah, obviously we're a lender and you know, we want people to understand that we can help you on a refinance or a purchase, obviously, right?
Yes.
And it would be unfair for me to say there's a cost to refinance. And so you really want to think about that.
Mm-hmm.
Do I believe that this home is going to appreciate more than the cost of refinance? Most of the times it will.
Yeah.
And when I refinance, as long as the break even, the cost of doing the refinance versus the benefit makes sense, then yeah, you can refinance. And as long as you qualify, the home's got the value needed and all those things. But my opinion is never to buy a home thinking, oh, I can just refinance later, because you never truly know. There's never a given. It's never an absolute. And anyone who says, you know, a lot of people say, date the rate, marry the house. I get what they're really saying, but don't just, like a lot of the people that bought 3 years ago thought the rates would be down by now, or 2.5 years ago. April of 2022 is when they started to go up. Well, people bought homes in June and July, and their loan officer told them, you know, hey, just you know, date the rate, marry the house, and you'll be able to refinance in a year or so. Well, they were wrong. Okay.
Yeah.
And so you can't bank on advice from a talking head, myself included, because no one truly knows the future and the events that could happen. COVID is a perfect example of this. But to be fair, yes, if the rates go down, in the future, which a lot of people say they will. Now, they've been wrong on the timing of that.
Yes.
But if the rates go down in the future, yes, you can refinance that house, get a better rate, and now you're enjoying the price, 2024 pricing. Maybe it's 2025 rates go down. Maybe it's 2026. I don't know. But you're going to enjoy 2024 pricing. You're going to benefit from that. And then you can benefit if they do go down, the refinance from that.
Right. Yeah, absolutely. Sweet. I think that wraps everything up.
Cool. Well, look, if you are on the fence right now about buying a house, take a look at the facts and the data and the numbers. Does it make sense right now for you to buy a house? If it does, well, at today's rates, well, what would that look like down the road? You can't bank on that, but it's something you want to look at. And if we can help you in any way, shape, or form, look at these numbers, please give us a ring, reach out. We'd love to help you, whether you're doing a loan somewhere else or not. Put some comments down below if you have any questions, comments, concerns. Let us know. We'd love to hear from you. With that, thanks, Nick. Appreciate it. And we'll see you next time.